Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Morning, Marty. Quick draw, Marty. Um, okay, I'm just going to mention on the current trade, not a recommendation. I'm targeting the LVN at 9 and VWAP. Not recommendations. Now I'm going to get into the business, if you will, of the Trader Lab. Good morning, everybody. Welcome to the Trader Lab. I'm your host, Tom B. Thanks for visiting. I stream live Monday through Friday, 11:30 to 1 p.m. Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. This is about the business of trading. And is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. Now, the thing to understand about this is that we are in a random environment, and it really takes an understanding of market mechanics. How does the market work? Why does it do what it does? And how at times we might get in alignment with it. And this is the focus of Trader Lab. In addition, there's a library of webinars, and if you're visiting in YouTube, there's a link if you're interested in visiting the Bookmap Discord Trader Lab community, which is a community of like-minded traders who have come together, and it doesn't matter how long you've been trading. This group of traders, what we do is leverage our collective experience to help each other do better. I'm keeping an eye on a trade here, so I got to kind of watch a little bit. Let me just keep an eye on things here. Okay. Let me take care of the disclosure. And I'm managing a trade, which is not something I like to do while I'm streaming. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is for educational purposes only to help you understand how the market works, why it does what it does, and to show you and share structured trades that you can use if you reverse engineer them to potentially build out the business side of trading. And of course, past performance is not indicative of future results. So we are in mean reversion at the moment. I'm going to take care of things. Let's go. By the way, this is what these trades look like. This is not a course. I'm not a vendor. I'm just like you. I've just been doing it longer. That's all. So these are available. There's 60 of these. You can download those if you use the link in the bottom of YouTube, and there is no cost. Let's get going. This is the higher time frame. Now, these are this is volume profile, but here's what's important about this. And this will give you an idea of why we were on the long side early this morning. 1 second. Okay. You notice we have our big sell-off. Now, all of you have been following the stream. You know these were all levels. These were targets. Down here was a target, and filling the gap yesterday was a target. So all of you who watch the stream, you know all of this. You can always go back and review these if you want to see the sequence of how the market evolves or develops, and then as it changes, and the changes are based on the participant behavior, not any indicators. And the thing is, at least for me, I found that if I can read the language of the market in real time, I might be able to have more timely execution. And that's why I use Bookmap, which is a high-tier order flow tool in order to potentially engage with the market. Timely execution. So order flow, and then it's overlaid on this chassis. One moment. So what does it say Well, we know about this, the Acapulco cliff dive. Then we have continuation selling. And then we have selling in the morning yesterday. And if you remember, we were looking for the gap fill and then whatever, it's just whatever. Because that's part of life and trading. It's whatever. So this tail tells us that the shorts, because the way the market tends to work is the market goes down. So let's go the other way. The market goes up, and now you have longs, and then we hit a target, and then the market takes these longs out if that's too high. And then we open below this key level, and it's the Acapulco cliff dive. So we take these guys out, okay? Here. And then what's under here? Well, we've got this, and whatever. So the market gets, so remember, the market gets long, and then it gets short. And then the market gets long, and then potentially it gets short, or whatever it does, it does. So yesterday, what happened here is we have a tail. If you draw a profile over these 2 days, which is showing us selling here, and even though we had selling, we had short covering. If you're sitting short, what would you do? And this orange line is the fair price or the highest volume between these 2 days. So what that suggests is, and the way the auction works, it's what's too high, what's too low, what's just right. So, and this is the retail price from yesterday's RTH. This is the retail price from these 2 days. So what I'm doing is tracking volume. So that suggests now that we're in a fair area and we can anticipate two sides. The other thing we can anticipate is a potential test here. And if it's too low, north, and then squeeze these guys. So that's the thought. Okay. And that's before today opens. And all this is posted in TraderLab before the day opens. So what I wrote in TraderLab, and these are not recommendations, is today, two-sided trade, balance, and with the lean, the squeeze. So that was it. So longs. Now, it doesn't mean I don't take a short, but primarily longs. So let's now get into it. And if you have questions, please post them. I'll do my best. And if you're in YouTube, please give a like and good morning. Okay. So RTH open. Remember what we're looking for. Potential two-sided trade. Now let me give you a little more information. This is the retail price from yesterday. Highest volume. I showed you on the chart. This is the ETH low. Has a high probability of getting taken out. This is the ETH volume point of control. What that means is that's where the fair price was. So what do we know? Yesterday's fair price is here. And now our ETH low is above it and above settle. And what else do we know? In the ETH, this is the fair price. What else do we know? This is the fair price in the intermediate time frame. And yesterday's high. So if the market is short, what I'm looking for is outside in trades to squeeze the shorts who are going to have their stops over yesterday's high, and we can get into yesterday's range, the previous day's range, not yesterday. Okay, that's the trade plan. Now let's see what happens. Now, a couple of things, of course. We can open and go higher. Brilliant. Yeah. Or we can open and go lower. And for me, I prefer the lower, open and go lower, because if I think the possibility exists that we're going to continue the squeeze, if you were short from the day before yesterday, would you use a down rotation maybe to cover? Maybe. Or would you consider that down rotation as the fuel to take your longs? Because if we get selling early, and this is a short in the TraderLab, except for me, it's not qualified. Now, it doesn't mean it's not qualified for you. This is actually a short, but it's not qualified based on something called context. This is what gets most traders in trouble. It takes time to figure that part out of this. It is very important to consider market mechanics. Where's the fuel? That's the question. So let's look at the first trade. Now, I'm going to and I don't want you to think that I'm speaking out of both sides, because we will see trades. I see shorts, I see longs. Okay. But here's the issue. Do I want to get short and join the shorts that are already short that have the potential to get squeezed? Or do I want to use shorts to trap these sellers? So now I have fuel, the stops above the opening swing high that I can potentially now, if I can find a long somewhere, then come across, take these guys out, and then continue the squeeze. So my plan for today, I'm just looking at the market currently. Lovely. What's to get long? So I post all this in Trader Lab. So some traders took shorts. I took long. And there's no right or wrong. I think the area where most traders have a problem is, now you can trade this, but the other side of that is, and I always mention this, if I'm taking a short, I am not thinking about the long, I'm managing my short. Where's the potential? It's on the long side today, early at least, to squeeze more shorts. And then I have a target above, and I'll give them to you. You can write these down, 23, and I'll show you where it came from. And then I think it's 32 or 33, or somewhere like that. In fact, let me show you where the target is, because you're going to see, and you can look at your chart right now. What's at 23.75? It's where we broke out of this area. So we have 02.75, that's a breakout, and the last breakout is here. So for me, the target was a return to test, and I have a high volume node here. I've got 34 up above that. So 23 and 34. These are my upside targets. Okay? So that's where the targets come that you're going to see. Now let's go. And if you have questions, post them. Now, I took 2 longs this morning. And the first one, where was it?
sellers at 6,000.
Yeah, this one. I took this one here. And this one failed. Okay? Because what happened here was I got my VPOC migration. This says going lower. Okay? Too high, break high. Here's resistance right there. Pull back, test. I got long, got a scale, and I'm going to come out the top. Not so much. So that didn't happen. Okay. One moment. Okay. So that didn't happen. So I got taken out of the trade here. Then I get my microstructure down here. I'm at the ETH low, which is a high probability target, and the possibility is to come here. However, and here's another little piece for you. This buy sweep, that sets up a counter rotation. So here, now I'm looking at it and I'm going, here's microstructure. And I'm looking now for my long, but I've got this problem now. This is resistance. See the behavior? Microstructure, break high, resistance. Hit the VWAP. What do I anticipate at the VWAP? Selling. But where's my support? It's right here. Why? You're going to ask. Because the buyers are here, the buyers are here, the sellers were there, I took them out, I hit the VWAP, and you'll get retail traders selling the VWAP. They're mechanical. Context is up, in my opinion. What I don't know, and my opinion doesn't mean anything either, what I don't know is how far out are we going to come before the buyers show up. But I do have in my plan, which is specific to the preference for me is sellers early, because now I have a leg of shorts in here, which if I rotate up will carry my trade as these guys get squeezed and they cover. It's part of an opening plan. And I always suggest, and I'm going to repeat it, that you do not trade the open unless you can successfully trade the other parts of the market, the other pieces, the other conditions. This is not where developing traders trade if they don't have a firm grip on something called context, because it's very easy just to go, oh, this is a short. Yeah, it is a short to get long, unless, you can do both, and that's fine. So anyway, this is the, so here, boom, scale out, grumble, support, resistance, mechanical sellers. Maybe they're right. Gamblers get paid. Support, long, then scale, and then out the top. Next target here, over an 80% probability we get there. If you're in the Trader Lab, you would know this. Let's watch the behavior. Where do we come? Let's talk language. This is the retail price from the ETH, high probability. If I get long, this was the last place it was too high. So where might the market come? Back to where it was too high. So this was another target. Now, the market pulls back. What's the retail price now? Well, if this is too high, what is too low? This is retail. This might be too low. I don't know. So I'm looking again. I'm going, well, I got my ETH low. I guess that's going to go. And below me, I have this. Naked volume point of control and settlement. These are also high probability. But what do I know? Shorts here, squeeze. What about here? And then too high. This is the auction. Then back here. If this is too low, and I don't know, I'm sitting here going, I don't know. And this is resistance now, right here. I mentioned this in Trader Lab. This is called a low volume node. Let me explain what you see here. And if you have questions, post them. I'll come up for oxygen in a while. We are in a rotational market. You notice we're rotating. This is what we anticipated for today, with this leaning towards the squeeze. So this is an outside edge. Let me bring you back here. When the market rips, it's not auctioned. An auction looks something like this. Chop, 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 chop. That's too high, too low. And one side throws the towel in. Well, the buyers are in control. You can see. Chop, chop, chop. Break high. Chop, chop. Break high. Chop, chop, chop. Right? Chop, chop. Target. Break low. Test. Potential exit or short if you're in Trader Lab. Now, support is here. What do I get? Right here, no clue. Truly, no clue. The only thing I know is my buyers were here and my buyers are here. That's what I know. I also know that my buyers lifted above here. So I got support right here. So if I come back to this level, this is really it for me. So this is, now here's a couple possibilities. If you're holding along, you have to put your stop for a higher time frame trade under here, or you manage your trade right here when you see a sell trigger. This is a sell trigger, this, at a location. Now, you could short this to come back, or what I was doing was exiting on the shorts and looking for continuation longs. Now, when we come under here, it sets up a small dilemma because we rejected this and we fell out of this upper distribution. That might be saying at the time, this, and I'm going to label it, how am I going to do this here? Okay, I'm going to do it this way. I'm going to label it just so you see where it is. Now, what this is like a retail price. This in a fractal is the same as that. So this is the highest volume from the whole ETH. And if it's too high, see you later. Notice where we stopped. This volume is now in the developing time frame. In other words, what's happening now? And right here, it's too high. Now, I had this run and squeeze of the shorts, and it left this structure. This is an outside edge or support right here. When I break below it, then this is now going to potentially become resistance here. So let's see what it does. I get this. Now I have volume here. I break high. Now this becomes potential support, but this is resistance. It's right there. So this now is here. So that's resistance, okay? So I don't have anything right here. Let me show you another way into this. So there's your resistance. This questionable for support. Break here, break here. You notice the resistance, break high. So right here is the outside edge of this, and you have this structure under here. So this is right here. You can turn around and buy this because it was what? Resistance becomes support. Now, when I see this very hard, I took this as a breakout, and it's not what I like to do. But this is my next target, 02. And where did it come from? As long as I have levels to work with, I'm reasonably okay with the outcome, right? I have to be. So what happened, so all we did was rotate down, and this 02 is the high volume. So and that's why I'm taking only longs, because this is like a tractor beam. The market likes to check volume because that's where agreement exists on a price. So if I come outside, we're going to come back here. If I come outside, potentially we're going to come back here. If I come outside and test, it might be too high. But if I'm in balance, like this one, then I can go both sides. I can trade both sides. I can trade both sides. We're in this balance. So I can trade both sides, and it rotates. So in this configuration, I'm looking for rotational trading with a lean to the upside because of this leg being short. Hope that makes sense. Now let's go back. So on the longs, to here, then trade management. Now, what's this? Outside edge. Let's come back. Now, what was I doing down here? It was an edge. Once we break away, and my next target is 02, what do I have over here, though? I have this. This is a consolidation. And at the outside edges of consolidations, we have those very popular low volume nodes. So this creates for me, when you rotate around these distributions, you really need to have a trade plan for something called mean reversion. So we are reverting in multiple time frames to this, and then the potential to squeeze, okay? And 23 is a target, as you guys know. So, and then above it, if we get going. So this is a rotation, right? And let's come back and look at this. Let's just go back to before all this happens. So what I'm doing is, I know I have this and I have the ETH high. There's over 90% probability I take out either the ETH high or low, and I think we missed the ETH low by a couple ticks. Well, that turns everything around. Also, I have over a 90% probability of taking out the first hour's high. So I'm thinking north by northwest. ETH high. Okay. So you could take O2, you could take the ETH high, and then stops, where are they? Yesterday's high. That's another target. So all these are longs. I haven't had I have had a short, but we'll talk about that. And then you're looking for this because there's fuel there. Okay. Now, VPOC migration. What does this do for us? It says higher. And so just longs so far. So this is Trader Lab. And remember, 23 is the target. And we got, I don't know, looks like 23 or 22, which has nothing to do with anything because it's random. So, the fact that somebody comes up with a number, it's irrelevant. Okay? Absolutely irrelevant. Now, 930, and this is 925, we have a statistic over 90% probability to take that out. So, and there's more. Let's watch. Where do we come? Let's look. What did we do? We tested the volume point of control. I don't have a trade at volume point of control. I need to get outside. Otherwise, I just don't. I have nothing to do. So there's some choices here. If 23 is the target, you take continuation trades. Now, I don't have a trade here. I'm just sitting here, and I know if I stay above this level and this, that I'm pretty good. But here's the other part. If I have a 23 target and I get a selling structure here, which is what this is, should I just exit and forget about it and look for another trade? And you're going to go, well, in hindsight, yeah, exiting would have been pretty good. Well, I think so too, except we don't have hindsight when we trade. So we're kind of, wherever. This is called the variable high volume node. What the yellow line represents is volume, and the way when it shifts, it is suggesting we have a new retail price. So if this becomes this now is too low, and I pull outside, this is my new low volume node. You'll notice that the auction is moving higher and the distributions are moving higher. Let's watch. So the only way I trade, not the only way, but let's just say typically, and in Trader Lab, what I suggest to traders is if we have a directional move, one of the ways to participate is to get involved is to wait for a counter rotation and then potentially participate. That's the deal. So if the market is up here, I'm not buying up here. I'm going to try to buy a counter rotation. So where are my levels? There, there, there. And since this is the new retail price, this is too low. I look at this as support, and I look at this out here as an outside edge. Let's see what it does. Outside edge. Mean reversion. So now we come back to an outside edge. Watch LVN. Sell sweep. What does that suggest? Potentially back to here because that was too high. There's the node. I'm going to put a little line here for you. And the way I kind of use this behavior is if I take a long here, which is a trigger, at a location, let's remember location, sell sweep, looking for reversal, get long. Now there's two ways to get long. You break, you put an order here for retracement, or you just get in the thing. It's up to you. Resistance now is here. Got it? Now, where do we come back? To where? You did right. I didn't put a little line here for you, but I guess I should. What is this? This is where the buyers took over. There's my sell sweep. There's my resistance. Here's my support. Are you guys tracking so far? As far as ICT goes, I have no personal opinion, but I will suggest you do some research on anybody, vet any chat, and especially if you need to pay for it, you might want to be careful with your dollars. There's no holy grail. There's no secret sauce. It doesn't exist. Just does not exist. So, but you never know. But I think you can find a lot of good information online about different, and whether it's Trader Lab or any place else. No, I don't. There's no cost for Trader Lab. I just share my experience with you. Oh, this is a structured trade right here. I didn't even see it. So the long is here to here, here to here, to that resistance, which is the bottom of that consolidation. And this is a structured trade in Trader Lab called VWAP to VPOC, and then potentially back there. Not a recommendation. I am current. Look at that. So let's watch this thing. We have to watch. We got to get through this, and this is our resistance is right here, that high volume node. I'm going to put a little line in here so you can see it. So we got resistance here. We got support out here. Okay. VWAP is a structured trade in the Trader Lab, and it's in those 60 PDFs that I share. And then we're trying to go here. This is the VWAP to VPOC structured trade. And and it doesn't mean you're not going to take a stop. Doesn't mean anything. We all take stops. Let's see how this thing turns out. We got to clear this node, which is this. Remember the saying, support becomes resistance. If I get above here, then there. If I get above there, then here. That's my long trade here. This is a Trader Lab trade. And again, it's not a recommendation. It's, hey, who knows? How are we doing in YouTube, guys? Please give a like. And if you're in the Bookmap Discord Trader Lab community, you could like it too. How are we doing there in YouTube? You guys have questions? And please give a like. And watch the streams. There's a whole sequence of streams. This stream is updated, every day I do a stream. And it's a sequence of continuum of the market behavior, and then overlaying a process or a business plan on top of these random rotations. So this is a structured trade. I'm okay with this one. What about you? 7 to here for a scale, then here, and maybe out the top. Doesn't matter. Remember, 23-ish was a primary target. And then if we get above 23, we're looking at this. But, never has to go there. And does it really matter? Isn't our job just to take our trades that have an edge, manage them? That means getting risk neutral, cover a stop, and then put your helmet on, and then the outcome is random. Isn't that the business? If you don't think that's the business you're in, then you really need to be thinking a little differently, I believe. Because the ego has all this need to be right and get approval, whether it's from a friend, a spouse, a teacher, a parent, or the market. It's all the same. We crave these needs socially and psychologically. It has nothing to do with our business, by the way. So all the things we need, we bring to the business, and those things are actually problems in this business. So you need to spend time to learn about yourself. What drives you? What are you trying to fulfill? And you're going to think on the surface, it's, quote, profits. I'm going to suggest the emotions are much stronger. The needs that you have under the hood determine how you behave here, not your intention. And there's our target. So this is called VWAP to VPOC. It's in the 60 PDFs of structured trades. And our next target is going to be this, because the sellers took over here. The buyers got absorbed up here. I have my high volume is basically right there at the IB. and there's a low volume node here. So if I'm trading this trade, I'm trading to this area. There, resistance, which is there, and then maybe this, and out the top. That part, not my job. This is my job, and then this is my job. You guys have questions? How can you be a great trader in 3 years? I have no idea. Come to Trader Lab. Help us all become great traders. Yeah, Sam, one like. Well, it's better than somebody disliking. New 84. Amazing. Well, I think what my idea is, I went through such a miserable learning curve. And for me, I'm trading, I'm forgetting 80, 90, 45 years, both professionally and now out here. And that means, and when I started out, technical analysis as we know it today was really in its infancy. So I got to grow up on indicators as they came into the public space. And I thought that was really the holy grail, because they work. The problem, of course, is everything works and everything's random. What I didn't understand is we're in a gaming business, not a business of confirmation, So most of us spend our potential development as traders trying to find confirmation and certainty, but we don't understand that doesn't exist here. Probabilities exist here, but there is no certainty. So I never understood the business we're in. And then I kept going down the same paths you've been on. But I did it for many years because new things were coming out into the marketplace, and I would take them and research them. And, you can spend a couple of years doing something because you're always having winning trades. So you believe you just have to make it better. Everybody has winning trades. Gamblers have winning hands. I never thought of it that way. I thought, I just have to make it better. Because I'd have runs of winners just like you, and I'd have maybe 3-4 winners, and I think, well, that was really great. Let's whatever it is, right? Buy sweep suggests counter rotation. Let's see what it does. So our outside edge is there, LVN, and our resistance in here. So now we got to see what it does. If you're trading mean reversion, which is rotational trading, you need a specific trade plan. So let's see how we behave here. So we have our outside edge. This is the mean. This is the primary objective of this trade. So you could scale there, get risk neutrals, job number one, manage your risk. Then here is the mean. So there's the reversion. And then outside, back in, or, and it's just one trade. That's kind of what the deal is with this. So all those years, I kept waking up with Trader Groundhog Day, and I did a webinar on it. It's in the Trader Lab, because I would wake up, I'd have winning trades like you do, and I didn't understand that everybody has winning trades. So that was actually the problem, because I thought, and then I added more indicators to start creating more certainty and more confidence. So inadvertently, what you start doing is loading things on there. And what it does is it creates paralysis, it creates conflict and ambiguity. And I kind of went in that direction. Then I said, well, I can do this better. And then I built trading systems. So being at the early part of the development of these tools was really interesting, was very exciting. And I really thought we had it figured out, that we just had to make it better. And then by optimization, that would solve it. Put all these great indicators together and let's get the right mix and fix for it. Well, that didn't do anything. It just created more of the same, just did it faster. And because it's an optimization, it always looks great. But what you're trying to do when you take a chunk of data from the past is you're trying to fit the future into what happened in the past, and it doesn't work that way. The market does repeat behaviors, but it doesn't do it on schedule, and it doesn't do it based on your curve fitting. It just doesn't work that way. But I, for a long time, thought that is what we're doing, right? Why would we have a system? Why would we have software where you can optimize it? Well, let's go down that path for a couple of years, and then keep waking up in the same place. How many moments have you experienced? Notice we're supporters. How many moments have you experienced where you got excited, aha, you spent whatever amount of time working on it, then you put it into play and you have a stop, you have a winning trade now, and everything's going along. But in the end, you're going in the wrong direction. What does that mean? It means you don't have an edge in spite of the winning trades. That's Trader Groundhog Day. And it really did a lot for me. Unfortunately, the time I lost did not do a lot for me. But when I started, technical analysis was looked down upon. It was voodoo. I mean, wasn't really being done a lot in the sense of what we do today. We didn't even have the tools. It was primarily Wells Wilder. And my initial education in trading was to CME, classical bar charting, open, high, low, close. There were no candles. They didn't exist yet, or they existed in Japan, but not over here until mid-late 80s, I think 87, somewhere in there. I think we started getting candles. Steve Nissen wrote a book on it, became popular. Anyway, a little bit about me, not a big deal. And then I was also, I have a lot more background than that, but that was my early development. I also shared an office with George Lane. He created stochastics, a great oscillator. So I thought oscillators were the holy grail because, look, the thing crosses over and then the market goes up. So easy. Not so much. You guys have questions? Post them and I'll take a look right now. Well, GA, Anthony, I'll answer that question. The opening swing highs and lows. The open is a specific individual trade plan. And I always tell, we have 3 trade plans primarily in Trader Lab. One is a directional move, where one side takes the ball and you're going to basically, or a trending move, then you're going to be taking continuation trades. The mean reversion, which is what this is, the market is up, going up. You can trade from either side, but if we think the trend or the squeeze is up, then you can also just take the longs. That's subject to trade plan. So we have a trend configuration with continuation longs. We have mean reversion, which this is, which is outside in, continuation longs. If we stay in balance, you can trade both sides. That's mean reversion. So we have mean reversion, we have directional plays, and we have continuation in directional, and we have the open. The open is specific trade plan. It's isolated because you don't have structure. And often what happens is the first move's not the right move. The first move, and it's different all the time. And there's a lot more to it. So I'm going to say opening swings high and low are always vulnerable because who's ever offsides on the current swing or rotation is going to have their stops outside those edges. I like to trade into those, subject to the context. And the other question there in YouTube, and thanks for asking it, is why did I draw a composite over 2 days? I drew it here because the sellers are here in the stops and the buyers are in this tail. And we came back here. When I draw the profile over the 2, this is 1 day as far as I'm concerned. I put them together because you got sellers in a wick and you got buyers in a wick. And look where I came back. I draw the profile over this to try to see where's the high volume. Is it up there? Is it down here? No, it's in the middle. If it's in the middle, that tells me that the market has found a fair price at the moment. It doesn't mean anything more than that. So then what does the market do if the fair price is in the middle of the distribution? It does this. So I know if it's going to do that, and I'm opening above this, which was the highest volume or retail price from yesterday. Let's think of this in multiple time frames, if you will. Yesterday, this was the fair price. If I open above it, then maybe it's too low. If I'm above this and below that, if I don't go here, where might I go? There. If I go there and these guys are short in here, then I can come back to 23.75, which was the breakout here. If I get inside here, 34 is my next target. So that's why I drew this composite over 2 days. Do they overlap? It's balance because of where we came. Does that make sense? At Phoenix, at Phoenix, what I do is I'm not rigid. I want to see structure. When I saw this, and 2175 was the target down below, and I think we missed it by 1 tick or something like that, or tick whatever. Then everybody who's short is going to potentially start covering. Now, you don't have to trade the long side. I trade the short side and trade rotations. It doesn't matter to me because of the volatility. But now it's longs only for me up to 23 and change. Then maybe we go here or maybe not. Doesn't matter to me. And then it's whatever. Does that answer your question? How we doing in YouTube, guys? Hope you're getting something out of this. This is Trader Lab. What do I think trading will look like in the future? I have no idea. I remember, every time there's a change, everybody thinks it's, somehow it's, I can't predict the future. I don't know what's going to happen in the next tick. See, we are rotationally trading at the moment. If you're looking at the market, what has happened here? Where are we coming? Well, don't forget, this is our target, and then we have one above. So this is rotational trading. These are shorts in the Trader Lab right here. This is called the IB failure. It's a structured trade. Here's a problem with the trade. If you take shorts, this is where you're trying to go because that's the mean. It's called mean reversion. And where you're trying to go out here to here. If you get long, you're trying to go here. So you can be taking, and this doesn't have range that makes it, maybe it does, but I don't trade for 5 points because I got to risk about 3. Why am I going to risk 3? I don't know. And then I got to scale here. If I don't have the range, it's not qualified. So I may not trade this unless I can enter with enough range to get risk neutral. And then my target is to come out here and maybe VWAP, but this is my outside edge. What's the market doing? It's doing this. This is rotational or balanced trading. It's a separate trade plan. This is what you would learn in Trader Lab. And it doesn't mean that all of a sudden the Holy Grail is showing up. I'm going to tell you, it doesn't exist. What exists in this business is very simple. Waiting for your trade that you're familiar with, that you have vetted, and you need to understand how the market works. This is how the market works. And most retail traders have no idea. They're just letting a line cross or something happen, and they take themselves out of the business because they never learned about trading. They learned about indicators. That's not trading. You can use indicators if you understand market mechanics. You can learn market mechanics. Wouldn't it be interesting to you to know that in this condition, the potential is rotations, not the bullet train, but we have the possibility, since there's shorts in the leg above us, maybe to continue if we get through this. If we can't get through this, then we're going to stay with this kind of stuff. If we get through this, then I have a target. That's as deep as this gets. So subject to the fractals I trade, I can be selling this, the IBF, back here, out to the LVN, long, back to here. That's it. And, or not, or you just order your pizza and have lunch if this doesn't fit your plan. Does that make sense? Questions, guys? Well, Athens, what part are you having difficulty understanding? What, that I drew a profile over 2 days? Well, let me ask you a question. If the high volume is at O2, might we come back to it? If 23 is a level for me, or whatever it was, 23, 24, is the breakout level, isn't that a level for me? And if I rotate down, because I have longs now, where might we come? Here. And here. And under here. So I have no VWAP to VPOC for me. Maybe 1 or 2, but what do I know? I came back here. I didn't get out. I didn't get outside of this high volume. That puts this on the map. So if you took a short here, you're trying to get here and down here and maybe to the mid. Where are the stops? Under the VWAP, under the mid, and where's our next outside edge? It's here. So if I can clear the mid, I'm going here. If I can't clear the VWAP and the mid, then I'm coming back here. That's what I know. I can't trade long here. So short. And then potential back to here. And if I don't get back and take out these guys, then the potential to come down to there. That's my trade. Doesn't mean anything. Questions? Yeah, Athena's, did I answer your question? Yeah, Groot, hi. Groot, really? The line is automatic. Yeah, Groot, it tracks the volume. So it's this is the highest volume for the whole day so far. And as the volume shifts around, it's going to move. Very cool, very important. If you're going to trade the auction, you need to know where this volume is. And the fact that it moves tells us this might be too high. This is now resistance right there. And in the microstructure, there's a low volume node. I trade in something called fractals. This is a fractal. This is micro high volume right here. If I get above this, I can go there. If I can't get above this, and this is too high, then I can come down. And my job is not to predict because I'm not blessed with that. So can't do it. So I don't do it because I can't. So I operate in a complete acceptance of randomness, like the casinos do. They operate in a 100% random environment. They don't know. All they know is how to deal the cards and play the game. That's all we know as traders, how to play the game. Structured trades are games that have edges. VWAP to VPOC is a structured trade with an edge, but the edge is only up to here. Now, I won't take this trade because I know the market is long and I know the stops are going to be under here and under here, outside edge. So if I can get under here, then I got this. And I can anticipate mechanical retail buyers here to try to come back there. So I already know where my next trades are. And if I get under the mid, I'm looking out here. So those are structured trades. Now, it doesn't mean you or anybody should get short. That's subject to your trade plan and your understanding of the market. So for me, this is a short. And then it's just, but if it doesn't fit range, I don't take it. I just go next. Because the most important part of this is getting risk neutral. Because then if you take a stop, you scratch, and your broker sends you a gift basket. Otherwise, I don't take the trade because there's trades all day. Yeah, Alan, it confuses you, but I think I answered your question, right? Why I put that composite, is that right? Questions, guys. If you got a question in YouTube, throw it in there. There is a little delay before I see them. Also, hit the like. Encourages me to continue doing this stream. There is no cost for Trader Lab, so a like, consider it compensation. Holding the VWAP, resistance is here, and then resistance is there. Okay? Let's see what it does. And if I get through here, then I got this. That's all I need to know to trade this. But I am not taking any longs, and that doesn't mean it won't go out the top and keep going. It has nothing to do with it. It just has to do with individual trade plan. And I'm not saying I got a good trade plan. I'm just saying it kind of works for me, and that's what I do. Every trader finds their own groove. You know, are you going to be going short, long, short, long? I don't want to do that. It's too much work. And look at the range. So it's just not what I do. I like, and the reason when I say I like, my psychology aligns with running tight stops. And for me, a tight stop's like 2.5, 3 points because of the noise and the harmonic in the ES. It just has that much noise in it. And I need a good risk reward on it, 10 points, 20 points. Yesterday, I was narrating a lot of 20-point trades. That pays. So, and when I take stops, I've kind of gotten to the point with a stop that it's okay, because my risk reward takes care of when I probe to get position in the market. Okay, let's watch out here. So we want to see what happens if we get under this, and remember where we're trying to go out here. Not a recommendation. Again, remember, you just as well come out the top. It's not our job to predict what it's going to do. So let's watch, okay? And Anthony, did I answer your question why I used that 2-day composite? I want to make sure you understand why. Well, I'm getting the question about the sweeps. What would help me if I see a sweep? What is that? What do I see? What does that indicate to me? Well, I'm seeing buy sweep here. Now, the market can do anything. We're still rotational here. But if I can't get above, right in here, if I can't go anywhere, we're gonna come down here. But the fact that there's a sweep doesn't mean anything. I kind of look at sweeps when they're in alignment. So I'm seeing these buy sweeps up here. So we want to see where this behavior might take place. So I see a sweep here. If I hold this level, that sets up a downside rotation, or I just keep pushing through, right? So I know now I'm observing location, microstructure, outside edge, and a high volume node there, wherever it went there. So I'm looking at this location. So let's see what it does. Remember, my objective is to see what happens up here. And if we take out this level, then we have the next target above. So I have no trades in here other than if I took a short, which, is fine, that I'm still, out to the edge. You see, the idea when you're trading mean reversion is you're trying to trade the edges. Then you could be looking for longs, but they don't qualify. I don't have anything in here. If the trade, well, let me put it this way. If you're going to trade this, you got to be pretty darn good at what you're doing. You can't enter here or any of this. You got to be reading the order flow. This becomes more advanced to be able to act on a timely basis. I'm getting my sweeps. The sweeps typically indicate counter rotation. Of course, we have a sweep here, but it's not that it happens here. It's that it's up here. Now it means something to me. Down here, it doesn't mean anything to me. So let's watch. Now, it doesn't mean it's the high and now we're going to zero. It means there might be a rotation. So for me, if I think there might be a rotation and I open a Bookmap to see microstructure, let me show you. It could be a short. Again, I'm not calling trades. This is the microstructure. I'm going to draw a little line just so you can see it, so you know what I look at. This little high volume node is the same as that node. Anytime there's high volume like this, our tendency is to come back here, come back here. And if we fall out, then we go to the one below. Other than picking stops at an outside edge, we could go, thanks for playing, then come back. So that's called mean reversion. Remember, this is a short to come down and take this out if it's in your plan. Now, I'm not calling trades. You have to understand what I'm doing. I'm showing you how you can learn to trade. I'm not telling you how to trade, because that's something you'll figure out. But you have to understand market mechanics before, in my opinion, before you ever have the opportunity to create sustainability in the business. Otherwise, you're just going to do. Now, there's a sell sweep, and it's at a location, outside edge. Let's see if we get a rotation up. Now, if I take this out, then I'm going for my mid. Remember? Watch for the counter rotation, microstructure, and this is an important location. Let's watch it. Micro support is right here. You see what's going on? Now, this is not a trade that I would take. It's a curiosity I'm sharing with you in the Trader Lab. Please give a like if you're finding this interesting. And visit the Bookmap Discord Trader Lab community if you're interested in learning. Because I believe anybody can learn how to trade, but you got to roll your sleeves up and do the work. And most traders, and I've read this, and I don't know if it's true or not. You got to put a few years in, minimum, to learn how to trade. And if you develop bad habits and made a mess in your development, chasing the elusive holy grail, you're going to have to undo it. That takes time. So you got to invest time. Don't throw dollars out the window. Where do we go? Here. So that's why this suggested this. And it's not broke yet. Now, I wouldn't be taking a long here. I don't have a long. So I don't take a long. Not when the mid is sitting over here. Here's something to write down. Think like a retail trader. Don't act like one. What do I know? I know there's stops at the VWAP. I know there's buyers at the VWAP. And I know there's stops at the mid. And what else do I know? I know that I can possibly come out here. And I know this is support here. High volume here. And O2. So I've got some important levels sitting right here. So if it comes out here, and I don't trade the mid, it's one of the least. I do it only in desperation, and it's not because of the mid. It's because other things show up, and it's not because of the mid. It's very rare that I take a mid trade. And the reason is that retail traders behave in mass. They will buy the mid, and they'll keep their stops under the mid. I like to trade into the mid. That's why I was saying this is a target. Because why? Stops. Now, what else might we anticipate? Buyers. So if I'm short and taking the longs out, I'm looking to come out here to get here. Now, there's a sell sweep. We're going to look for a counter rotations. Now it's trade management. Let's watch. And I don't call trades. Just remember that I'm take stops too. You don't want my stops. So now we got the stops, 215, sell sweep. Now we get to look for a counter rotation up, not a recommendation. This is all Trader Lab process. Now all it says right here is I've got my buyers here. I had my sweep. These guys got absorbed. Microstructure is sitting right where my pointer is, and that's going to be our support. And either we're going to hold it and move up, or we're going to fail here. Let's see what it does. Microstructure. This is called trading in fractals. Russian dolls. Now, this is not necessarily anything anybody ought to do. Let's just see what it does. Can we read the behavior? And this is not a trade, this is behavioral. What I do in the stream here is try to share with you how the market works so you can learn this. You do not see any indicators, do you? So how can I do this? And by the way, and don't think there's any magic 8-ball or special sauce that's going to solve the problem of randomness. That's not what this is about. This is about understanding how the market works, why it does what it does, and how you can anticipate where behavior might take place, and then what do you do about it? Now that's up to you what you do about it, but you can learn this. And what I do is I read this as a language. So when I say I don't use any indicators, I don't use the ones that come out of the box that you guys use. I use this because I'm interpreting a foreign language. Why did this seller here? Because that was too high. Why did it come down? Absorption. Where's my resistance? It's right here. That's what I know. I don't know it's going to stop there. I don't know anything. I do know when I saw this that I had a long for a rotation. What else do I know? If I come up here, this high volume right here where the sellers took over is also resistance. If I have a trade plan, I could be looking at these microstructures, fractals, as resistance. And what's at the bottom of this? It's resistance. And what's at the top of this? It's support. Watch. Resistance, support. Why? The buyers took over here. Resistance. Test. A long continuation trade. Where's resistance? Here. If you can operate in this range and get long, you got to scale here. Then you're trying to come back here. It's mean reversion. If it doesn't work, hasta la vista. Thanks for playing. They'll even give you the coupon to the buffet. That's trading. I wish I had a better answer for you, but I think it's pretty good because my job is to wait, to anticipate behavior, stops, sweep, trigger, test, resistance, and then either I fall out the bottom and come down here, which is possible, or come back here. That's it. Questions? Ambience, when it comes to the microcomposites, I put them together to see the information I need to see to trade in the range I think I'm going to trade. I use the swings. So if you look at yesterday and day before, basically you got two outside edges. So for me, that's almost like it's a consolidation. You got too high, too low, and then we come back to the middle. So we may be done on the upside. So this is our LVN out here. This could be interesting now. Let's just see what it does. Or do we just keep coming down? This is an outside edge. Let's just watch. It's not a trade recommendation. It's an area of interest. If we keep going, then park for me. Outside edge, potential opportunity or not. So where might we come? Back here. So if we do, and this is an outside edge, let's just watch it. Remember, it's here. So if I come out here, in theory, I can come back up here. If I get through this, I'm back in the, mean reversion. All this is rotational trading. So I need to know where my levels are. And this is what the auction is about. Location. What happened here? The buyers are above the sellers. Now I got sellers here. So this is resistance right here. sellers there, resistance. So if I take a long, and this is where you got to know what you're doing, this little node is too high. So I need to scale in front of this. In front. So the idea, and this is how this might work. If you get long here or there, you're trying to get here. This is the range. So these are very aggressive. Let's watch. Can you see the structure? These are not, what I'm attempting to do here for you guys is show you how to read the market. Now, here's the thing about the auction. The auction does not care what we need for risk reward and getting risk neutral. So in your trade plan, there has to be a specific requirement identified for entry to obstacle for risk to get risk neutral. It doesn't matter if this trade goes wherever it goes. What matters is knowing where the obstacle is, where the sellers were in control here, and that we can come back and check them. And if these sellers who are over here, who took control, think this is a great price to sell, you're going to get selling right here. If they're not there, we continue north. Watch the behavior. This is trading the auction. So I know not what will happen. I know if I get long that I got support here and I got resistance there. If I get long here, I got to get scaled here. Then it's manage the trade. And then I have maybe sellers at the mid. Who knows? And then if I can continue, and I might not go anywhere, I might just come up here. I got a sweep. Now we're going to watch to see if we get a counter rotation or we push through. We got VWAP up here. That could be nice, but this is a sweep and we're at mid. Let's watch the behavior. If we fall out of here, this trade will be over. If we push through, north for a while. This is trade. This is trading, guys. There's nothing more to it. You don't need, in my opinion, anything more because you can't have anything more. You cannot have certainty. You can have maybe it's going to get above here, or maybe these sellers who took control here are going to go, oh, really? Have some more. Sweep, what does that say? Counter rotation. Now, the thing here is, what happens? Do I rotate and the buyers are going to overpower these sellers? Or is the trend down and all we did was squeeze? Does it matter? So you take it one trade, one location at a time, and you do your thing. In the Trader Lab, you would learn, assuming you do the work, and you roll up your sleeves, and you bring some humility with you, and check your ego at the locker, and you can learn this. Now, the thing about it is, if you're into, oh, I got to get long here, I'm going to get short here, that's not the business of trading. What I'm sharing with you is how the market works. You then overlay this process in your time frame. If you're a swing trader, you can use this for that. If you, and now when it comes to scalping, I'm not a fan because of the cost and the risk. I just personally like to get paid when I trade because I take stops, and the only way I pay for my stops or overhead and cost of production is range. So that's what works for me. Other traders are going to be trading long, short, whirling dervishes. And if they have an edge, by all means. I don't do that anymore. I have done it. Been very active. But I'm much less active because I wait. Again, not saying that's your thing, but many retail traders come into this business think that it's a video game and that there's an ATM in the basement. I'm going to suggest, no, not really. Resistance, sweep. So we have to, this is a very important area here, because if we can't get back above these guys and we have a sweep, then we're going to fall out. So I don't know, it's not my job to know. All I know is where my trades might show up, what my triggers are, where to enter, where I have to scale, and then helmet. What else do you need to know to trade? How about this? What else can you know? And even then, it's random. Does that make sense? Blown account. Blown account. Huh. Hope not. When I see a trigger, it's structure. The triggers are micro auctions. For example, there's our sweep, which suggests a downside rotation. And this trade's going to, is over. Okay? Now I have a sweep here. I'm still at this outside edge. So we're going to look. I mean, I think we might be done on the long side, but that doesn't matter. Where'd we come? Out here. There's my sweep. There's a micro structure. Let's just see if there's any behavior when we come back to it. It's right there. I'll put a little line on it for you so we can watch it. Sweep, absorption, chop, 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 break high. So this is a triggering structure. It's not a trade recommendation. Let's look at it. Buyers took over here. Sellers were absorbed there. Sweep here. These are components. So this is a triggering structure. Doesn't mean anything. It's just a trigger. You got to think of it that way. And it's very hard, by the way, not to be, to be detached from the outcome, but that's really the business we're in. And the emotional element of this is the biggest obstacle, I think. I believe you come to Trader Lab, you learn how to trade, at least this way, And I don't know if you see value in this, why I would say it might rotate up, why we had the rotation up there. By the way, where's my resistance? I know you're asking. Where did sellers come back in? Here. So sellers are here. Sellers are there. So I got resistance here because the sellers took control. I got my sweep here, which gives me the upside rotation and the trigger. And then I've got my stops are here, and up the top, wherever. But resistance is sitting at these high volume nodes. I'm going to put a little line on here so you can see the little node. That's resistance. It was created by that. So I'm using microstructure or fractals to enter, trigger, and to see micro resistance. So if I can get long here, look at the range. I'm not doing anything in this. I can't trade this. And now, when I say I can't trade it, let me put it to you this way. I choose not to trade it because I need to get risk neutral. So I can't because my sellers are here. Now, if I had range, then this is okay. So what I have found is, and this is something you can learn, the auction doesn't care about our range. It's really important. When I recognize this, if this was out here somewhere, instead of being right here because that's the last auction, then I could take it and the market would potentially do the same behavior, but there's range. So my job as a trader in a business is not to take this trade, but to wait for the trades that give me the range. Otherwise, I'm putting myself in a little box. I got no room, you see? So if this was further out and I take this trade, now I've got a better location for the trade. But this is not doing any good here. So no longs. But I want you to see the behavior, because if you learn the behavior, just like this up here was a potential short, right? Or an exit because of the sweep. There's a sweep up here. And then, whatever. Final questions? I got 10 minutes. Ask them. And use the link in the bottom of YouTube. I'm not done by any means, but use the link in the bottom of YouTube if you want to visit the Bookmap Discard Trader Lab community. There's no cost. And there's a library of webinars that you can look at. Some of them are up to 4 hours, 5 hours almost of real-time narration in all different market configurations. So you can see this real time. And here's the Trader Lab community. There's a lot going on in here, a lot of interaction, a lot of mutual support, research, statistical probabilities, and a lot more. It's a group of traders that have come together. This is about the business of trading, and everybody takes stops. So we're not gonna, not gonna worry about that. There's this what I posted. Actually, it was posted early. Actually, I posted it yesterday at the close. That higher time frame chart I showed you that set up the day. So this is what you would learn in TraderLab. And again, learning doesn't mean solving the problem of randomness. It just means maybe you'll do something different than what other retail traders do. So this is the library. Thank you, Ned, for putting this together for us. Day trading, fantasy versus reality. Are you a trader or gambler? Why most traders using indicators fail? Are you trapped in trader Groundhog Day? That was me. I know this is potentially done. Remember, our upside target was, I think, 23, 24, right? And then 32 above it. So we got to our target. Who knew? How to trading gaps, trend days, trading inside higher time frame fractals. There's so much more. All this is available at no cost. And there's a lot of additional education in the Bookmap Discord server. Stocks, options, crypto, order flow with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, and a lot more. And a lot of different streamers with a lot of different stuff. So feel free. Outside edge. Oh, actually, it's not an outside edge. Outside edge now is up here. So as these outside edges move, if you fall out of a distribution, that says now potentially here and maybe down out the bottom. Now, let me mention something to you conceptually, and I am running out of time, so ask your questions. This higher time frame, this is called balance. So, and this was our resistance. Remember, 23.75 was a potential target for today, and if we got through there, 34. That's it. Now, what is going on here? Rotational trading. And what else? This is called balance because of the O2. So two-sided trade. That's what I'm anticipating. And also I anticipate. Now, when I say anticipate, I'm not saying predict. I'm saying anticipate. And there's a saying I kind of made up in TraderLab. You got to anticipate to participate. And then if it changes, you change with it. It's about alignment, not prediction. I have no prediction. I know what might happen. So in the world of maybe, what might happen is we take out the first hour's high, which we did, and then we come down and take out the first hour's low. It's two-sided trade. That can create something called the neutral day, where both sides are active. So you got the shorts here and some in here, coming back to there, being squeezed, and then we got our sellers and the longs who got long today become the fuel for the downside. So it's rotational trade. Both sides are getting thrown under the bus. It's a matter of the potential for an inside day, and both sides get plundered. Does that make sense? That's the Trader Lab. That's understanding the auction and using the volume profile as a chassis to attempt to get in alignment with it. Past performance, not indicative of future results. We're going for this. Not a trade recommendation. What do you guys think? How are we doing? Dusman, do I treat the overnight mid the same as the RTH mid? I use the overnight mid typically not to trade against, but as a target. So early on, depending where the mid is and the overnight volume point of control. So if I was under this, then this can be a target. This can be a target. In fact, it was a target. But this is the retail price. This is more important than that. But this is material to me on the open. So we had the open, we went down. Remember, there was a structured trade that wasn't qualified since I wanted to get long or somebody could get short. I know traders in TraderLab did. Not a problem, except you're joining the side that's going to potentially get squeezed. Then the long is back to here and then to there and then through yesterday's high because we're looking to squeeze, right? So that was the morning trade. That's all cool, you know. And then remember what our target was, 23. So that trade, I think, worked pretty well. That's TraderLab. Now, was it going to go to 23? Don't waste your time wondering about it. because it's random. So you don't think about it. What I think about now is we fell out of our distribution and now we're going to take out potentially the first hour's low. It's called neutral day. Now that puts this on the map. That's all I know right now. Then, subject to, and this is not a trade recommendation because everything is like you got to see it to believe it. If we come outside and we get down in this area and I find exhaustion, then I would be looking at a long for mean reversion to come back inside somewhere. Not a recommendation because we could just keep going south now that the longs squeeze out the shorts. And now the longs are holding the bag. You see? So we have to see what happens. But the trend is down in the higher time frame, you see? So whatever. You know. The CVP, as far as the question on the volume in the CVP, it all it does is measure the volume of what's on the chart. That's the chart volume profile. This is the whole day. What I use this for is to isolate consolidations in high volume. You'll see this little node sticking out, high volume node. It's very important because if we get below it, it's saying that's too high. And now my outside edge is here. So now we've fallen out of all of this and rejected it. So now this is my outside edge. And now I have volume here, there, and this is like a VPOC. This is called trading in fractals. So what I do is, if you think, and the easiest way to conceptually think of this is Russian dolls. Multiple time frames, as you guys think of them, right, are all inside each other. Whether it's monthly, weekly, daily, hourly, 5 minute, whatever it is, right? They're all the same. And in the intraday developing time frame, there's no time. There's only fractals, different. So the behavior is not based on the clock. It's based on how long it takes for a seller to take control. And this was absorbed right there. There was a seller there. That's what I know with order flow. Then it's what happens if I come back to a location. And there's the micro high volume and the low volume node in this microstructure is right here. So potentially we could just do that or not. I don't know. Okay. Please give a like. Hope you got something out of this. Use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. It's for serious traders who are interested in the business of trading, understanding what it really is. It's probably not what most of you think it is. It is really more a gaming business. But the thing about gaming is we have a proven successful business model, and it's called a casino. If we understand how casinos operate, then we might begin to understand how trading operates and use a process that we can overlay and then go from there. And then you vet and build out a trade plan. And you come to Trader Lab, it's really about the business. Hope you got something from today. Please leave a like on the way out. Subscribe to the channel if you want to get timely notifications of this stream and other streams that you might want to take advantage of and take a peek at. Appreciate you guys coming by. Don't forget the like. Pretty important. And I'll see you guys tomorrow. Trade well. And thanks for visiting the Trader Lab today.